Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Wednesday morning pre-market webcast. Okay, hourly chart of the E-mini, and when we talked yesterday, right before the open, we talked about this zone right here, the key price zone, weekly pivot, monthly pivot. What did we get off of the open yesterday? A test of the weekly pivot. What did the dip buyers come in and do? They do what they do, which is buy that dip. They took that opportunity, they turned it into a dip buy, and they spent the rest of the day moving price up above to the key area of 2184. Now, if I back this off, you can see that 2184 has been a problem. Here. They made the new highs, then they lost it again, couldn't get it back. It was a problem before. So, the bulls have put themselves in a position now where they must hold 84 as support. So we're slipping down a little bit here by a few ticks, but I mean, by the end of the day, on a closing basis, the bulls really do need to close above 84. Okay, the closing above 84, I think, makes a pretty clear statement that we, that we should plan on seeing the bulls make a real run at the all-time high up at 91.5. I mean, it's laid out for them. It's on a tee. All they have to do is really just execute now. If you're the Bears, you have to retrace all that damage that was done yesterday. You have to get back for a second test of that weekly pivot. The danger there is the vast majority of this uptrend has been built upon matching lows, double bottoms, floors, whatever you want to call them. If they were able to turn this around and do 10 handles down to 73, they would have to do it in a way that would not leave a second test of the weekly pivot within 24 hours. That would certainly spell doom and new highs if you're a short. It's exactly what you want if you're long. The best way to do that, and the only way to do it really that the bulls have been able to do anything sustainable on in this market, is with news. That's sitting around waiting for the other shoe to drop. So as somebody who trades what they see, the bulls are in control of this tape really until not only this 67 to 72 area is broken, okay, broken and closed below, but they're going to have to get back down to this 53 floor, and they're going to need to break that. So the Bears have had their opportunities. Thursday was a big opportunity. Not taking advantage of the jobs catalyst was another opportunity. You tested weekly pivot here, you blew it. You tested weekly pivot here, you blew it. So the Bears have, they've dug their own grave here, so to speak. So they've got a lot to overcome. Let's look very quickly at the daily chart. So here was your push down to 53s. So the floor holds, weekly pivot holds. So you have to say at this point that the mid band's been won by the bulls. Okay, they fought it, they got it back, they closed well above it yesterday, and now what the bulls need is follow through. If you get follow through, you test the yellow line here, the upper band, lower band, middle band, upper band, middle band, lower band. That's how the mini trades. That's how that's how it likes to. It's how it likes to do things. So with any kind of follow through, and that's a conversion of 84, you see a move here to the upper band. The easiest thing for the Bears to do is to defend 2184 right here, right now, and turn it into the 4th, 5th, 6th failure to get over the top of that level, and use that to build momentum back to the downside. Just like there's only so many times the Bears get to go to, say, 73 or 53, there's only so many times the bulls get to go to 84 before the market says, you know what, maybe this is all we got. Maybe there's value down below, and then, we can have maybe a few more day pullback. So 84 is huge today. It's what this morning is all about, 2184. Okay. Everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website, princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.